Okay. I'm going to say it now, all right? I'm trying not to laugh, but look, I'm not bearish, I'm not bullish. I look for movement. I'm a trader. That's what we do. Okay? But those of you that complain about bearishness, especially if it's correlated to Bitcoin, tells me that you are the same individuals that are buying Bitcoin at the highest price, because that means you only want it to go up so that your value of Bitcoin purchased continues to go up in your favor. Those of you who welcome the idea of lower prices on Bitcoin are the ones that bought Bitcoin when it took a slump, and you're sat in some wonderful profits right now, and you're eager to get back in at the cheapest possible time so that you can just build value of your portfolio. Is that not what we do with investments? You wait for it to get a bit cheaper and then you buy some more and then it goes in your favor. What on earth is DCA? Does DCA work on the premise that it has to be rising aggressively to the upside for you to start buying it? What the? Welcome, ladies and gentlemen. I hope you're doing well today. It's Friday then. Yep, it is good old Friday. Now, what's the story? Well, Trump's traveling, so he ain't going to be saying nothing until later on this evening. Of course, between travels, he might stop and have a conversation with a couple of reporters and what have you. But there's nothing in the scope that Trump could actually reveal about anything on where we are with the tariffs. The general consensus now is that the US tariff story with China has kind of relaxed a lot of investors. The bonds are still smacked to the downside. And we are now seeing a flurry of data coming in regarding the US economy, which could be suggestive that we are heading into possibly a recession. Why would you not welcome a recession? Would you not welcome the idea of a cheaper Bitcoin? Again, you must be the individuals that are buying Bitcoin when it hits the all-time high, because ain't no one complaining about a cheaper Bitcoin. No one. How many of you say, I'm waiting for it to come down to 92 so I can buy it. I'm waiting for 81. I'm waiting for 8K. I'm waiting for 10. I'm waiting for this before it goes to that. So it tells me you guys don't want to be buying at premiums. If you do, then cool, man. Yeah, well done. You wait and go and buy something of value that continuously increases in value so that you can be the dude that buys it from the guy who's selling it at the highest possible point. So if you want to give your head a little bit of a wobble when you see a title like Alert, US Recession Pending, it's got your attention because I've got logic behind it. And once you leave with that logic, you'll then say, you know what, he's not actually bearish. I get it, Tino. I'm not blindsided, or I haven't got the wool getting covered over my eyes thinking that the game is always about up, up, and up. Don't get me twisted. I want that parabolic vector candle to the moon kind of flavor with Bitcoin. Am I a moon boy secretly? Probably. If I see Bitcoin moving up, I'm like, I welcome that. That works very well for me. It works very well for you. But there are times when it has to come back down to only go back up, because that's the way the book works. When I say book, it's because the problem with cryptocurrency is it's so motivated by people's idea and speculation of where Bitcoin's price is going to be. So what do? They borrow money. And where's that money being borrowed from? Our dearly beloved liquidity providers, Mr. Market Maker, to make you have the luxury of being able to go in and leverage at 150x, yeah, baby, to the moon. That's it. LFG. Happy days. Let's get with the program, ladies and gentlemen. Enough of the rant. I'm not bearish. I'm not bullish. I look for movement. When you understand that, it takes away the idea of being stuck in a position, and you then say to yourself, you know what? I think Bitcoin could actually come back down just a little bit. I'm going to look to buy it. Then I can take advantage of a 3-4 grand move in Bitcoin, made some money, take the missus out for a walk, do what you're doing, and happy days. The missus, take the dog out for the walk. For God's sake, man, I've got that so wrong. Anyways, let's get with the program, ladies and gentlemen. So, futures are rising, and it's good news across the board. Yesterday, with the repeat of the Saudi Arabian deal, I mean, okay, look, we know they're going to be putting money into the US economy. That is great news, okay? It says here that US futures gained with the S&P on track for one of its best weeks this year. And that's not bad, considering that we've had this story with the tariffs, and it's been indecisive, back and forth. The bonds market's taken a smack. Just quickly go over to the bonds market and having a look at that. You can see that it's slowly trying to make a little bit of a recovery back up. The yields in themselves are still trading at highs. 10-year right now is coming back down again, so that's good news. and then the 30 years also pulling back, but we do still have relatively high yields across the board. So it means that investors are still demanding a higher rates of return from the Fed, from the government, to purchase US debt. Now, let me just get to the program of what we're talking about today. I'm going to dive into this story about recession. I'm going to give you a couple of charts to help you understand the logic behind it. And then, of course, we get into a little bit of price action, because today we have news announcements regarding consumer sentiment. We've got consumer sentiment and, of course, inflation expectations from the consumer. These are two important metrics for the Federal Reserve to help understand the nature of the consumer's behavior, because fundamentally, without you guys going out spending your money, the economy is not going to move. And that's the truth. So let's get with the program and understand what we're talking about. Mr. Dimon, the guy who slates Bitcoin, yet JP Morgan is heavily invested in blockchain technology. I'm waiting for this guy to retire and get out of here, man. He says that recession remains a possibility on tariff fallout. Okay. Goes into it and it says here, hopefully we'll avoid it, but I wouldn't take it off the table at this time, at this point. That's what he said on Bloomberg Television. And he says, if there is a recession, I don't know how big it would be or how long it would last. Right. Okay. So let's just understand, what are the chances of the US going into a recession? Fundamentally, it says here that the US right now, recession probability comes in at 13.62%. It was at 17.2. Now it's come down to 13.62%. Wonderful. We're not going to go into a recession. Cool. What's a recession? Courtesy of Santander, says the recession in the economic cycle. It says here, when you get a recovery, the GDP effectively goes up. Okay, so recovery from a drawdown in GDP, gross domestic product, would then lead you to the idea of growth when the GDP ends up becoming positive. Then it gets to a peak where the GDP doesn't actually show an increase, neither does it get to go down at all. So effectively, you could be at a point where the GDP isn't expanding, it's just holding, right? Then we get contraction in the GDP where it starts to correct. And then when it goes down into a drawdown and the GDP ends up negative, we then get recession. So there have been 48 recessions, okay, in the US. And every single one of them starts off with a contraction in the GDP. You might remember the Great Recession in 2007, 2009. That was what? The subprime mortgage crisis. Contraction across the board in terms of the GDP. And the GDP reading came in down at minus 5.1% from its peak to trough, okay? So it's safe to say that when we get contractions in the GDP, that tends to lead to recessions. Well, the last GDP reading, ladies and gentlemen, if we just go back to that time, let's go back on this, where are we at with our GDP? Came in at, where are you? Advanced GDP came in lower at minus 0.3%. Now we go back into it. We see this chart right here, the real GDP. On the right, you can see it's on a downwards trajectory, okay? So it's starting to go down. Now, couple that with the idea of what's going on. New president, okay? You've got deals coming in the sense where you've got investment coming into the US. And that's good news, all right? Because fundamentally, all that's done is it's actually squeezed corporate America from doing business overseas and it being cheaper. Now they're being forced to go into the US and do business there, which naturally is going to do what? It's going to force those US companies to have to charge more of a markup because they're doing business in the US and it's a little bit more expensive. That means they're going to have to hire more people from the US, and people in the US will demand more of a higher wage. So that's naturally going to have an impact on corporate America, okay? Now, with that being said, given that the GDP is starting to roll down, we have seen that given that it has contracted, there are other aspects to the economy that have also been contracting. When we go into the actual data, from last week's, from April's GDP reading, you can see the PMI ISM manufacturing index that came in higher at 48.7, but it actually is below 50, which means there's a contraction in that sector. Prices came in lower, which is fine, but manufacturers have to start encouraging people to spend money, and that's not what they're doing, okay? There is a contraction in the manufacturing sector. So from the manufacturing sector contracting, what do you think is going to happen there? If the manufacturers aren't doing anything and they're not producing as much because the expectation of the future doesn't look too great and people aren't spending money, it then causes a bit of a problem, which then leads to the GDP to trend lower every single time because what they're putting out is not getting enough in because no one's consuming it. Now, with these tariffs, you've got that story as well. There's going to be tariffs coming in and out, and investors are excited about the fact that there is a pause, but it doesn't take away the idea that it's going to be gone. That means tariffs are still present. And unless tariffs are completely off the table, then that would then justify Dimon saying that there is a possibility that tariffs are going to be a problem in the future. So whatever is happening now is investors are just excited at the fact that they can put money to work. Okay, the main thing that's happening right now is the interest rates. Now, the expectation is that they're going to keep interest rates high. So for how long? If the GDP is contracting, that means things are slowing down. Why having high interest rates? Is that going to help? Well, it's not. Look at this. In front of you is the percentage of banks reporting stronger commercial and individual loan demand. Look, it's going down. So there's not a demand to borrow money. Hold on a second, Tino. The M2 supply is going up. The money supply is going up. Well, according to this, no one's taking on money. Why? Because your interest rates are still high. Look to your left, bottom right here. What do you have? 4.5%. That's why Trump is banging on about getting these interest rates cut. Because if companies are not borrowing money from banks or the demand for loans is not coming in, it means that people are scaling back. Well, we go back into this chart right here, and that is where the contraction could start coming into play. We've already had a contraction in the GDP, which was the first time since 2022. It all starts with contractions in the GDP. That's why you see over here is one of the main readings, GDP, right there. Minus 5.1, minus 0.3, the early 2000s recession, contracted from its high. I mean, look, it's there. Now, does it mean that we are going into a recession? Well, not necessarily going into a recession, but again, gross domestic product is the most commonly used term in economics, and it's the main measure to tell the Fed and to tell everyone around the world, how is your economy doing? And if it's not doing good and your contractions are happening in the GDP, then something is broken. Another factor is this: Treasury yield spread. This right here is the representation of investors' expectation that the future itself might not look too promising. This right here is the 10-year over the 3-month yield spread, followed by the 10-year over the 2-year yield spread. And it's pretty self-explanatory. Whenever you see gaps in between the spreads of the 10-year, 3-month, 10-year, 2-year, okay? When there is a spread between the two, it usually means that there is a problem, okay? Just take this correction right here. There was spreads between those two, and it's led to a market downturn. Spread right there, downturn, okay? When they're trading close to each other, when the spreads of the 10-year, 3-month, 10-year, 2-year yields are close to each other, it means money is being transacted. They're actively exchanging and taking advantage of certain rates at certain times, okay? So the yields are contracting. That means things are good. It's nice, tight spreads. Liquidity is available. Look at the spread over here. You see that gap? That gap started to come into play. The market corrects ever so slightly. Then it comes into each other again, but then you get another gap, which then effectively led this wild gap right here, which then effectively led to the downturn in towards heading to 2020, which after 2018, when we had another stock market crash, and the reason for that stock market crash was for what? The unrealized net losses and gains for banks. You remember that? That came to a sum of around 285 billion, where the banks themselves had unrealized losses of minus 285 billion. And then the market crashed. Right now, it's at 582 billion unrealized losses. But don't worry, we're not going to go into a recession. Don't worry, the market's not going to contract. It's never going to correct. Nothing's going to go down. But then saying that, the Dow Jones itself is still up from the last 5 years, and it's trading positive 61%. So you're still good. But the stock market will always recover from all crashes. Why? Because it's cyclical. We will go into a contractionary phase. We will go into an expansionary phase. And that's why I don't understand when people are like, you can't be bearish all the time. Well, fundamentally, you can't physically be bearish all the time because not everything goes down all the time. Equally, nothing goes up all the time. But if the stock market has a 100% success rate at recovering from crashes, here we go. It's right there. Look, S&P Dow Jones, it's just going up and it doesn't stop. S&P going up, it doesn't stop, but it expands and it contracts. And when you accept the contraction, that's when you should start buying. It's not bad news, ladies and gentlemen. I'm pretty much telling you all where the discount is. Okay? So the thing that you can take away from this live right now is when GDP contracts, that is an alarm bell to say that there's something going off. Something's not right. Look at where you are right now. Bonds have collapsed, okay, trading below 100. The dollar itself has lost its purchasing power. And we've also got the idea that there is the fact that Trump is purposely trying to reduce the purchasing power of the dollar, even though he's complaining about it not really doing too well. You got everyone and their friend and their dog going overseas to take advantage of the rates that are being supplied on the euro and the yen. Let's just have a look at that for a split second. I mean, you get 96.24% and 205% on the yen on a day till expiry being 1. So yeah, that's where money is going right now. Quickly going over into the yen itself and the euro, just to put things into perspective. Euro currently trading sideways. It is on a negative downwards move, but you look at the daily time frame and it's doing relatively well with the rise, retrace, continuation, rise, retrace, possibly another continuation. Banks across the board are in a fundamental view that the euro is going to end up going back up towards 1.1400. And then, of course, there is the possibility of it even going higher. That would be welcomed on the idea that dollar yen is going to continue to move to the downside, which would then depreciate the value of the dollar. And then if the dollar value goes down, that's naturally going to end up sending investors over to the asset, which we call gold, because the expectation of interest rates to be cut in the future is something that could be happening. So you can see that there's madness across the board with investors' idea about where to put money, because this is what they're trying to avoid. They're trying to price in what if we do go into a recession. GDP has contracted, so that's one of the major things. And if GDP comes in at a contraction after 2 quarters, we've got a problem, because theoretically that's what they say. When GDP contracts for 2 quarters, you've got a problem in the US economy, and that's okay. Now, the data that comes out today, ladies and gentlemen, is going to give us an idea as to where we are with that story. It says here that preliminary consumer sentiment is going to be coming in and they're expecting a reading of 53.1. Okay. Now, go into it. It says here that it's a leading indicator of consumer spending, and it surveys around 420 consumers, which asks the respondents to rate the relative level of current and future economic conditions. Ultimately, the higher this number is, the better. But look at the last few readings, okay? It's on a downward slope. 74 in December 2024, January 25, 73, February 67, March 57, and then April 50.8, and now it's coming up a little bit, 53.1. I would be very, very surprised if consumer sentiment is positive, given that we've got the tariff story coming into play. Even though tariffs have not been solidified and they've not been actually put into action, they've been introduced, they've been paused, they've been taken away. We got 455,000% tariff on China. It's absolutely madness. And we've got deals coming in from Saudi Arabia. Investors are just sat there shaking their heads left and right. Where do I put my money, man? That's why you are seeing the fact that the 2-year yield itself is the only one that is trading negative in comparison to the 10-year yield, which means that if investors are taking on the 2-year yield, it means that they are seeking to only lock up liquidity for shorter periods of time as opposed to longer periods of time, which is where the 10-year yield is. The ideal spot is investors to go to the 10-year bonds. That's where the Fed can actually, or the government can actually really get the best out of investors if they invest in the 10-year bonds market. Okay, but if investors are going over to the 2-year yield and taking on that, it tells you that investors' expectations of the future is not looking good. So they'd only rather risk their capital for shorter dated securities. And that's why you're seeing the 2-year trading negative, because they're actually buying that asset right now with the 2-year bond. Okay, now with that being said, let's just quickly go over and have a look at where we are with cryptocurrency overall. So Bitcoin holds above 100K, driven by institutional flows. So it's all good for Bitcoin, man. We want higher Bitcoin so we can buy it at higher prices. Yes, that's what we want. I know you do, because we are the exit liquidity, ladies and gentlemen. That's what we are, yeah? We are proud to say that we are the exit liquidity for the dude that wants to sell $42 million worth of Bitcoin or $45 million worth of Bitcoin when it goes up. If you want to be part of that gang, Congratulations. You've just earned yourself the title as Moon Boy. You are the exit liquidity man. Do you want to be that person that buys when prices are rising? Just envision the dude that is buying, that you are buying from, man. Why do you think someone smiles with a fat smile on their face after they've just sold a painting, a Van Gogh, or whatever thing that is valuable? Why are they smiling? Because they've just sold into the person that's prepared to buy, okay? If you're going to be that dude that buys at these points when Bitcoin goes up, and actually I'm a day trader, so I can take advantage of these up and down movements. And I know you guys are looking for a bigger scope on Bitcoin's price, because if you guys react to when Bitcoin moves up 35 cents, and then you have a price projection based off that saying it's moved up 35 cents, ladies and gentlemen, 400K Bitcoin is happening next week. That's what crypto's about. That's what's a joke. And I don't understand it. You know? Bitcoin's the long game. I get it. Michael Saylor, just buy. You know? Anything after Bitcoin is nothing. It just has to be Bitcoin. You know? And that's the problem. There's a culture that you have to maintain positive mindsets and have an expectation that Bitcoin can only go up. That is the biggest BS I've ever heard in my life. Because if the economy can contract, it can also expand. And when you have that in your mind about Bitcoin's price, you know when to buy it, when the economy contracts. We've got a contraction in the economy. It's there. Where is it? There. GDP's trailing lower. Goes negative, dustbin, recession. Cool. Buy your Bitcoin. Anyways, let's quickly have a look at the stock market and where we are with things across the board. So, NASDAQ. It's been doing great, NASDAQ, but it's got a couple of gaps that are a problem for me, which will be something that we need to pay attention to in the future. Why? Because these are exhaustive gaps, all right, in the sense where there's been loads of buying out of hours and it forces the market to go up. News announcements has correlated the idea of that. But the problem is when you see such expansive moves to the upside in the stock market based off news, it tells you that a lot of investors are quickly trying to sell premiums at those high prices because everyone takes good news as a good thing. When you hear good news, and that's what we got right now, when news is positive in the marketplace and you're in exposure, take advantage of that and try and either ride the momentum based off the idea of positive news. Like, for example, US-China trade deal. That was great. The stock market pumped. NASDAQ, look, moved up over the weekend because there was a deal. Awesome. Happy days. And then after that, it moved up a couple of days as well. So it looks like things are promising out. I mean, if you look forward here, it's not really following through. So what's the story? You know, okay, we've had our fun. We've got optimistic about things. Where is it? You know, going over into the chart itself to bring things into perspective about the volume coming into action. Yeah, we've got a lot of commitment coming in. And there's the top 5 buys right now: Microsoft, Algo, Costco, Eli Lilly, and Google. Okay, so look, we've got volume coming in. Okay, on the NASDAQ, volume's coming in. We had one distribution day yesterday, and now this candlestick right here is, of course, it was the start of today, so naturally it's going to be a lot. It's also gapped up ever so slightly, so that's looking awesome for the NASDAQ. Quickly going over into the NASDAQ itself to understand the day's activity. All right, so this is the daily time frame. It has spiked up to only come back down again. Go into the 4-hour time frame. You can see it's just a slow drift upwards, which means that everything that pumps in the NASDAQ is going to be news motivated, all right? So just make sure you're taking that into consideration when you do trade the NASDAQ, especially today, man. But we do have news announcements coming out which will move the markets. And we need to really see this information coming in negative. We want to see consumer sentiment down. We want to see inflation expectations down, because if they see that, that means investors will then say, yes, the Fed is going to cut the rates. We know we're going to get rate cuts. We want to know how more or how many rate cuts can we get? Are the rate cuts going to be to the sum and size that the investors want? We're going to get 25 basis points. We're going to get 50 basis points. Okay. So if we can get a whole point, oh yeah, man, that means the dollar's going to come down. We can start borrowing dollars now and stop using the yen. All right. So the data that comes out later on, 3 p.m. UK time, 10 a.m. Eastern Standard, is really going to set the tone for the day's trading. So just be very careful in around that time What time are we on? It's 1:30 right now. So just be careful around that time when you are taking on risk. Quickly going over to Bitcoin in terms of the order flow right now. We've got Bitcoin on the 4-hour stuck inside of this range right now. It looks like it's trying to preserve its gains. We've got big imbalances down here. That's good news, but they don't always have to come back to those imbalances. You have imbalances down here, and then they just move away, and then it moves up again, okay? So just take into consideration that Bitcoin trading sideways is a good thing, but it also leads to a lot of stagnant behavior, and it leads to indecision amongst investors. Look, liquidations to the upside for the shorts, liquidations to the downside for the longs. And when Bitcoin's price is doing this, there's so much money being made on the back of Bitcoin doing that. So if you remember, I was talking about the iceberg orders that are being loaded up in this area here. And when I'm saying iceberg orders, I'm making reference to, just quickly for anybody that is new to the live stream, an iceberg is, imagine this as $100 million iceberg, okay? And it's split into 10 orders of 10 million, okay? So 10 orders of 10 million right there, $100 million iceberg, happy days. Once that comes, there's your iceberg order being taken off. That one, that one, that one. And you go into the charts and you see this order here for 45 million. Well, around 104,800, there's also another iceberg order to the sum of 42 million. So that order, if I can see if it's still present, well, we got 29 million right there, 104,555. There's 29 million there. We go up a little bit more. There we go. 42 million at 104,800. So 104,800, you got $42 million that want to be sold. So that's when price goes up. We had a transaction last night for 45 million when the book was originally 40 million. So someone came in and added another 5 million on top. Okay. So the idea is that there is an iceberg of someone selling clumps of Bitcoin as it's going up. Okay. Remember, that guy's selling to you guys who are buying as Bitcoin's price is rising, okay? Just to put that into perspective, all right? So who's really bearish? Yeah? I ain't bearish. I just look for movement, right? When Bitcoin's price drops, why is he buying 5.86 million? He's sold that now. Oh, 5.64 million. Ironic. He bought it here. Where was it? That 5.6. There you go. Somewhere there in that region. You just saw it. And he sold it up here. So we don't know if it's exactly the same person, but isn't it ironic that the values are near enough the same? You know? So when you go into today's market, all right, pay close attention to the fact that on the daily time frame, Bitcoin has been a little bit choppy. There's not been any real conviction of direction right now. Everyone in retail is like, oh, where's it going to go? Oh my God, what's the blockchain? Who's moving Bitcoin? Where the wallets are exchanging, taking off the exchanges and taking money out of exchanges and putting it into their Bitcoin wallet. Ooh, okay, cool. I'm not seeing that commitment yet in the sense where price is going to go higher, okay? The more people put Bitcoin into their wallets, the less chance they're going to be coming here and selling it. That's positive. But doesn't take away the fact that there are still participants that want to sell the Bitcoin. 42 million, 104,800. Go up a little bit more. 40 million at 105,300. Go up a little bit more. 42 million at 105,500. That is a problem. That's a problem. That's why Bitcoin will go up and then pull back down again. And you're asking yourself, why doesn't Bitcoin go up? Because when you got dudes that are dumping that much Bitcoin on Bitcoin's price movement to the upside, that's where you get ranges and that's where you get your resistances, okay? So take into consideration that the order flow is suggesting that there is commitment to sell a lot of Bitcoin as it goes up. That doesn't mean you can't exploit the movement, which is why I say to you, if you're buying Bitcoin in these little ranges right here, and from this point right now at 103, Bitcoin shoots up all the way towards the 105,000, that's a 2.5 grand nearly move in Bitcoin, and you're on spot and you clump a big purchase. Say, for example, let's say you buy, I don't know, like $10,000 worth of Bitcoin, and it increases in value to $3,000 to $4,000 in its price, okay? That's money that you can take out, man, and then get back in at another point. But then as you're doing that, you're earning more money off Bitcoin's small movements, okay? So that means that in the future, when you do buy Bitcoin, you can use more money and be in it for less periods of time because you won't need that much of a big move to make a nice return. Capiche? That's the story right there. Yes, Jezebel, supply and demand is enough. But the problem is if supply and demand is enough, why is it people buy at demand, but then after that, price drops? Is your logic of this as demand? No. The demand for me is here. This is demand. Down here. That's demand. Why? Because when it's dropping, there's supply. Because people are selling it. Get rid of it. It's going down. It's going down. It's going down. I'll take that. I'll take that. Supply's coming in. I'll take that. I'll take that. And then because the supply is coming in, that's when the demand is established. Bang, it then reverses out. Supply and demand's about absorption. How much or how long have we been absorbing these sales from the retail trader who's been selling his Bitcoin because it's going down? Yeah? When you've got that understanding about supply and demand, don't look at supply and demand visually. Yeah? Don't look at it visually. Look at it from a psychological perspective because people are buying at that point. So you're saying to me that at this point is a supply because no one's buying. Of course they're flipping buying. Why? Because people are coming in getting ready to sell it. There is an expectation. There will always be a supply. There will always be a demand. It's just where. That's what we've got to try and work out. Any questions? Probably. People who are watching this stream for the first time, okay, are probably confused about it, all right? Go to the Traders Reality website, just start on the homepage, and you can take what I'm talking about and apply it with the system that I use, which is the hybrid system. Because for those of you that are new, if you look at every red vector candle that you see, there's a high probability that price is going to come straight back into it. Just go and play this game. Highlight a vector candle and then look at how it comes back to it. And then your experience over time where you've done that exercise will then prepare you to be like, okay, I think I'm starting to understand that price is probably going to start coming back up towards that point in the future. I will now position myself to take advantage of that. Goes from smaller time frames like that, and then you've got wider time frames where you've got a vector like this where price comes back down to it. You see this here is going to be exactly the same here. So you're going to get this blowout top structure, come back down, consolidate higher, and then shift out. The same way it comes down to pick up the orders is the same way they go up. Why did this candlestick appear here, ironically, here? Why? You know? Anyways, Tino, make it short, up and down. Both, my friend. Bitcoin's going to go up, then it's going to come back down, and then it's going to go back up again. So if that tells you that the bias is to go up, because it's going to go up to come down to only end up back up again. Michael Saylor, baby. That's how it works. With that being said, ladies and gentlemen, I hope you enjoyed that. Mad love and respect. I know it's a lot to take in. But if you go back and watch the live streams and the videos, it will all start to make sense for you. All right? Take care of yourselves, gang. Mad love. Peace.